Good day all. I want to clear something on this USDCHF and I want to pick out something and let me advise on this video. Before you become a profitable trader, you need to stick to number one. Like I have like 4 rules that I do follow before I take my trade. I can stay one full month without trading. Sometimes I'll not see my setup because it's not aligning. If I want to pick one pair, maybe I'm targeting one pair. Then if I want to trade multi pairs, these are what I always do. Number one, I make sure I stick to that my strategy. See that my strategy, I don't care who likes it or who doesn't like it. If you believe in anything, that particular one strategy is what I stick to. And what is that my strategy? I always start from the monthly time frame. And in that monthly time frame, for it to be easier for me because I'm not using laptop, I'm using my phone. If you look at it, you see how tiny and very minimal it is. I'm using my phone and my trading view on my laptop. But because I'm using my phone, I'm making it easier for people that don't have laptop or bigger screen to be able to identify some key levels because each previous day highs and lows, previous monthly highs and lows, previous weekly highs and lows, they represent liquidity. No matter what anyone is telling, any strategy that doesn't go with highs and lows, that thing is not a strategy. That's the trick of trading. So this my strategy here, I strictly believe in following my monthly time frame, weekly time frame, and daily time frame for my markups. And I always tell you guys that once I come to the chart, I change it to line chart on monthly time frame. I know that we have overall highs and I don't want to go back to the other ones, maybe the fafa highs and the lows. What I look at are the previous year. I can manage the previous year. I can use the highs and the lows, depending on how close price is towards those highs and lows. Let me change the color. Everybody knows that my black is my monthly, my red is my weekly time frame. So now, as I've marked the closest highs and lows, and you know that when we change to line charts, it determines the body close. It shows the body close, and it shows clear support and resistance. So if maybe by marking it, maybe you might think that maybe what am I doing by marking all those plenty? I'm marking them because using it to know my support and resistance. The high is support, the low is sorry, the high is resistance, the low is support, and it's just normal for every strategy. In fact, all strategy, any strategy that anybody call ICT, SMC, they're all highs and lows. There must be highs and lows. So maybe if I want to get the shadow of my wicks, I can now pinpoint it. I can ask, okay, since I have a closer overall high here, I can now use the wick of this. I can now use but that one is optional. But because we are day traders, intra-trade, okay, let me say day traders, we use the closest high and low of the previous candle. We use the highs and lows of the previous candle, which is, at least we've marked this one. Okay, let me shift it so that it will not confuse us. Then I will mark the previous high and make sure you do not use the body of this particular one because the wicks tells us a lot. It tells a lot of story. I've marked the black. All the black you see on this screen is my monthly time frame, support and resistance, liquidity levels, anything you want to call it. But it's highs and lows. You see the high, the low is just highs and lows. Just the simple term. I don't want to be using big English on it. So now, as I've marked it, I always check my monthly time frame. If there's any fair value gap that price acted upon, and this fair value gap is tiny here, it's very tiny, and maybe price did not react towards it, or that was why there's this push here. Maybe that's why there's this push here, which I'm not looking at. I'm not looking at now because last month we took this trade, we took this push, we took the short term, I think, and then we should took the sell side too. So now I've looked at it, I've marked it. We have on this monthly another fair value gap here. We have another fair value gap here. We have another fair value gap here. And we have this demand zone, which I've already taught people that this is a demand zone. This is a demand zone. This candle is another block. But you can include everything. The last candle before the push, the strong push. So now you know that there are liquidities down here, internal liquidities and external liquidities down here. So we have a demand. So we still have another target here. All these things are objective of this monthly, although they're not relevant, but it's good for you to know. In case if price starts pushing down, you know that here is my target. If there's a swing low, the swing low is my target. And if price decides to push up, what are the criteria? What are the objectives towards this upside? There's equal body close here, which I will call equilibrium. Then there's a swing high here, which is another target for the upside, because we have to use the monthly to get the whole objective of these moves. So now, what do you see at the left-hand side? This left-hand side, there's a fair value gap here, a big one for that matter. There's a fair value gap here, and this fair value gap is a bearish fair value gap. So you see the two objectives on this monthly time frame. So we have two objectives on the monthly, and this monthly denotes you can leave this chart like this. Then when price breaks through the low and still go back inside and break through the high and give us maybe a fake out or something and still drop down to clear this place, you see that swing trading is fun. So you need to have a very clear strategy and understanding on how to take your trades and where to take it. Is it from the monthly or from the weekly? If it's from the monthly, you can remove the whole weekly time frame and focus on them. If it's the weekly, you remove all the monthly, and if it's going to confuse you, which is not that much confusing. So now we have a bearish fair value gap here, and there's another block which have there's an equilibrium at this swing high here. So we have this whole place as liquidity, and you can see from here immediately price broke this structure here. That was when it reversed, and as it reversed, it went down for a very long time before it hit this place, and we can call this one a retest of this particular uh, inside candle here. There's an inside candle here. So because this is a large order block, so there's an inside candle here. So that was why price came down to this place and retest it. As we retest it, it now start going pushing up. So this pushing up now leave us with this other block, which either price is still at this middle point. If you look at here, now it's giving us a double bottom here. I'm trying to analyze this monthly time frame so that you will have clear understanding on what you're doing on this particular strategy. Because it's only one strategy. Go from 2 years back. It's only one strategy I'm using. I know that it's taking time for you to make, because there are a lot of backtests. If you rush it, you make mistake. You need to backtest, forward test, backtest, forward test. It masters you that if anybody is saying anything, you won't shake. So we finish our objective on this monthly. We'll go down to the weekly time frame. What is the weekly doing? The monthly time frame has given us the insight towards the weekly time frame, and what we are focusing on for us to day trade, because we are not position traders. For us to day trade, what are we focusing on? Look at that monthly previous low. Look at the monthly previous high, and this is the weekly time frame. From the weekly time frame, you can see that price is still moving in a range. It have not, since it broke here and went back, it have not broken this low. So, and this something like head and shoulder. Let me say here is the head. These two wings is the wings. So the closest place price is now is the previous monthly low and the previous monthly high. These are the closest place that price is now. And here we still have a large liquidity here, which is a fair value gap here. We still have another fair value gap here and equal swing highs here. So you see the way price, you know that what do they call it? The monthly and the weekly, they are aligned. They are closer to each other. They are closer to each other. So now, what as a day trader that wants to profit from this, what will you do for this particular one? What will you do? Because the month just ended. What you will do now is, since the weekly and the monthly align, you mark the high and the low of the previous monthly high. This one is now acting as both the previous monthly low and previous weekly low. So I will now change the color to red. I'll change the color to red. There's no more plenty talk on this. So this is the daily now that we are trying to focus on to be able to take our trade on this USDCHF. We are trying to focus on this particular place now to take our trade. So now you have seen that this is our, remember that this one in between this line is the fake out, the midnight move of opening of the day, because the week opened within the week. So the one you will mark, please note this, the one you will mark is this last candle in the previous column of last month. So you mark it. You are not going to mark that fake one. You mark that one. I think that's where some people are making mistake on this particular one. It's supposed to align somewhere, but let me not push it much. It's supposed to align with the previous weekly high. So there's no need, if you want to use the double color, just to make sure that you have two liquidity levels there. So you mark your previous daily low, the week, then there's an order block. There's a fair value gap here, and we have somehow something like a inside candle, which is acting as another block. But I always choose to mark the week, because I know that the other block is too big. So if price wants to come down, price will definitely come down at least 50% of this week before reversing. So as I've marked it, what will I do now? Because I don't have any clue on what the week will give us. Then the secret I asked us to add to our strategy is marking out where price close, our monthly close. This is where price close for the month. This month closed here. So now I always tell us that we should, after, you can still look up your 4-hour time frame to check if there's any closer thing that will give you a clue on what is going to happen. Then after checking it, what you will do now is for you to go to 1 hour to wait. So I don't know, I think price just managed to still be below last month's close. You understand? Price still there and it's still coiling, and on 4 hour we don't have anything at all. I think there's a volume imbalance here. There's a volume imbalance on 4 hour, and this volume imbalance might be the reason why price is going down to this 4 hour bullish fair value gap, going towards this 4 hour bullish fair value gap. So now we have our objective, but there's no clear break. Price have not broken any of our daily highs or daily lows, which will help us to trade during the day like this. And even if we are going to swing any of this trade, we are going to wait. Practically. We are waiting because this price have not been moving for long. Price have not been moving for long. So we are practically waiting. We will wait for price to give us a clear break. And once it gives us a clear break of this previous daily high or previous daily low, we want to see it happen. And whenever price breaks the previous daily high, sometimes it consolidates and reverse. Sometimes it consolidates, gives us another fair value gap, and use and continue. So what you'll be looking out for is it breaking for a continuation or is it breaking for a reversal? And that's where candlesticks come in. Why I said you guys should not be using 15 minutes for now is for you guys to understand the meaning of this break of structures. I just want you guys to understand the meaning of this break of structures. So what we are waiting for is, we have already known that price is still below the last week's low, but price have not clearly taken out our previous daily highs or previous daily lows or previous weekly highs or previous weekly low. So what the price is telling us in our strategy, a bit on our strategy, is to wait. So we are waiting on USDCHF. Then let me backtest something. Let me backtest a bit. Just because of this our break of structure. Let me go back to what happened last month. You know that when price opened last month, I said everybody should mark out where the candle closed. And candle closed here. Okay, let me remove all this because I finished explaining this one. Let me remove it. I don't want to use clear ones because I have other analysis and motion. So let me clear it. Now I'm going to use last month. I'm going to use last month for this explanation I want to give now, so that we understand this break of structure very well. So now let me start from the So we're going back to last month. So this was where last month was. It was previous monthly high and previous monthly low, and price closed here. I'll still adjust it on the lower time frame. I'll adjust it there so that it will not be that confusing. So we go to weekly. Time frame. This was our dodgy weekly time frame. Let me mark it so that we understand the meaning of this strategy very well. And these are our previous. Now on the daily, we are starting from the first day. This is the last day of the month. That was the previous. I just want to show you what happened that last month. Okay, price closed the same place with the monthly high. It's at the same place. So let me push this so that I know where I am. So we are here. We are going to our 4 hour, and this is where we are working on. This is where we are working on 1, 2, 3, 4. This is a 4 months. 4 weeks we are working on. So now, remember I told you guys that once you come to the chart, where price close is very important to market. Price close here. I don't know, some people followed it, and even you keep following it the way I was telling you guys to follow it, it won't be a problem. So look at what price did when market open. Usually market open, it gaps up, and since it has gapped up, you see the where candle close. We couldn't catch you. There's no way, because of spread. There's no way you can catch this candle to buy. But this is another 4. This is 1 to 4, 4 to 5, 5 to 9. You understand? So around 9, 10, that was where this last bullish candle open. So you have marked this one, you have marked it, and price have already as market open on Monday, price have broken through this our previous daily high. As it has broken through this our previous daily high, we have a gap here. It was this gap that we were waiting for it to close. Oh, sorry. This red stuff. Okay, good. Sorry, let me get. Don't know why it's double. See where we are working here. So this is where we are working. On. So now you see how price gave this gap, and this gap now, as it has given us this gap, we wait for this gap to be filled up. And since price have broken through our previous daily high with the gap, and we're waiting for you to close, that does not mean that you know that price will still retrace back to close this. Me, I don't trade like that. I might have said, okay, since price have broken through here and pushed up, let me take the pullback down. But because I'm a very conservative trader, I have to wait for Monday candle to close for me to be able to know where price will get, for me to get another daily low and another daily high, for me to be able to get another daily low and another daily high, and which I have gotten here. I've gotten it. So Monday was an off day on USDCHF for me. I did not take any trade. I was watching the trade for me to know what will happen. So on that Tuesday, I knew I have a previous daily high and low here. What I am waiting for is for price to break either the low or the high. And now, as you can see from on Tuesday, price broke the low of the candle. And what will I do? I'll wait for a retest. And this retest, I always use my 1 minute because I have two other blocks here. I have this tiny one here and I have this bigger one here. So what will I do? As I've marked it, I always use blue. If you watch all my distance, my entry is the same. If you go to my channel, you see that all my entries are the same. Okay, now I've gotten a fair value gap here. What will I do? I'll go down to my 15 minutes candle. I'll go down to my 15 minutes candle. We are doing a back test, and this 15 minutes candle have given me my double top here somehow, like my M pattern here. There's a neckline here. So this place have already given me a stop loss where I will place my stop loss. So any trade I'm taking, I know that here now is a 1 hour fair value gap. Either I place my stop loss above this 1 hour fair value gap. And now from my left hand side, I need a take profit. Now where is the previous daily low? This previous daily low now will be my target. If I'm to take this trade, this previous low will be my target. But because I have another swing point here, which is, that's why I say that this is our previous weekly high and low. It's very important. Okay, I've adjusted it. I can still use this, my previous weekly low high here. Maybe low. Which one was it? Here. I'm supposed to use it because I've already marked it. I don't even care the name again. So far I say I've seen red. I know it's weekly target. I'll take my profits here. And from this place, the retest of this, because price just broke structure here. I know that if I go down to 1 minute to give me a clear entry, another fair value gap, I don't want to go give people with that 1 minute entry anymore. So I've seen that price have broken this particular Monday low, body low. I've seen it, that it has broken it. I have every right to take this because I've had all my confluences in one place. But from 1 hour to 15 minutes I have. So if I'm selling, my target is there. You understand? Then if I want to swing the trade, that's when maybe I'll wait on this 1 hour time frame. I wait on this 1 hour time frame. I say, okay, since 1 hour gave me a fair value gap and I saw this retracement and I've taken the trade, it was on Tuesday. I can now say, okay, let me target here. But immediately I see price break through this previous daily low and previous weekly high, I will bring my trade to break even. Or if I have two positions, I will close one, bring one to my entry, anywhere my entry is around here, to protect my capital, because my stop loss is around here or here, which is not even more than how many pips? It's not even more than 30-40 pips. It's not more than, it's not even up to 20 pips if I go down to 15 minutes. So now I'm using 20 pips of stop loss against how many pips target? Is more than, from here 100, is more than 80 pips. It's more than 80 pips. So now I've taken my first position. Maybe I put two positions. I've taken my first position of taking the profit, and I still have another liquidity level here, So what I will do is that on Tuesday, before anything, I will take my profit. Maybe if my account is tiny, I will not hold on this trade for long. Now I've taken the sell side. And now what will I wait for on Wednesday? On Wednesday, I've taken my partial trade here. On Wednesday, I saw price. It gives me another high. I've marked out this high again. I've marked out my low on Wednesday. On that Wednesday, what did price do? Price went back. Price, after that Wednesday, price on Thursday, price went back to the previous, that Wednesday high. And as I've gotten to this Wednesday high, it broke the level. And as it broke the level, it retest and start pushing up on Friday. And that Friday was when, I don't know, I think I took this trade on Friday. I took this buy on Friday. Buy close because it's weekend. I don't like holding some of the trades during the weekend. So I now held it. That was how I did that trade. So you see, each of the break, check if the break, once price break, wait to see if it's reversal break or continuation break. It's very, very important. It's very, very necessary. And when in a day price takes out both the high and both the low, in fact, if market is downtrend, know that a reversal is coming. Market might start going up. Immediately it breaks that low. you will see a reversal candle on the lower time frame. You see that price is going to go far. And if it breaks low and breaks high, you will see a reversal towards the downside. Maybe price was going towards the upside before. You see it reversing back. It's a secret. It's just easy. So maybe you guys should just back test. I'll upload this video. I will give it time. Then I'll delete it because I don't want this particular video to be outside. It's not sound. It's not that sound. I'm doing it for the class. So I just want to give it this week. You watch it. I'll still delete it from my YouTube channel. Or I'm going to use the other YouTube to upload it. Then I'll send it to you guys. Please watch it very well. Maybe watch, rewatch for this week. Watch, rewatch for this week, and back test and forward test. Once price break any structure, highs and lows, if it breaks that high and low together, sometimes price will just reverse. Once it breaks the low, breaks the high, you see a strong reversal. A strong reversal. So you can even either choose that, oh, I want my one strategy to be once price breaks highs and lows at the same time, I'll wait for that reversal. Then you now swing. I'm still waiting for a swing trade. I've not seen. Although I've not scrambled the whole pairs, but there's no need. We'll still use one to see if we can see from all those pairs that I show. We'll still see if we can see something there. Then if we see, we'll now swing for like 2 days or 3 days. Not much. We're not going to swing 2 weeks, 3 weeks. It doesn't make sense to me for now because you guys are still learning. If you start swinging like that, you'll not be able to catch up so many knowledge on how markets moves. So actually it's okay. We can still do it on your demo. Take the trade. You see how long. Sometimes it will take 1, 2, 3, 4 months. Sometimes it takes 4 months or 3 months for you before it will reverse. So those 3 months, 2 months swing trades. For now, we don't need it. Let's just be swinging from 2 days, 3 days, 2 days, 3. If I see the one that moved 2 days before consolidation, I will call our attention towards it. All right. Thank you. So please watch out for all those ones. Anyone that's like last week, you can see here that I think we have that where price took the low, took out the low and the high. Let me see. Yes, on Monday. Okay, no, it did not. On Monday, it did not took out the low. Went back. Okay, we did not see that. Okay, we did not see that last week. We did not see that last week. Last month, sorry. Nothing like that last month. But I think last 2 months we have that last 2 months we have something like that. Price took. No, we don't have last 2 months. So maybe you can just look for it was this one I did not have something like that. Price took out the low, yeah, took out the high, and immediately reversed. And since that day it reversed. Check the dates. Since that, I think it was February or so. Since that day, that's February 12th. Since that day, price reversed. It has been going down since that February. I say, is it February? Maybe I'm not getting okay. Maybe it's February. Since that February till towards the end of February. When was that? This was where 26 from 12 to 26. See how many days that it took us before price now reversed. So let's try and backtest and let's stick to one strategy. Let's know that every strategy must have previous highs and lows. Let's focus on the break of those highs and lows. And then another thing again, let's try and journal our trades. Please, let's try and journal our trades. And another thing again, I want to stress is if your entry does not have an exit point or your stop loss, if I should have a stop and a profit point, please let's make sure that you have a stop and exit point. I beg, whether it's the profit target or the stop loss target, make sure it has, even if you did not write it down, even if you did not put it in your trade, but if you have a visual stop loss, fine. Maybe you've already known the tricks and you know that price will reverse. Immediately it comes to retest here, you know that your stop loss is around this swing low. If you see price coming towards this swing low, please close, even if you did not put it on your trade. You can close. Sometimes I will not put. Once I see that price is coming down, or maybe it has broken this low, something like this type of flow, I will sit in the trade and wait for what is coming. Loss is not a crime. Loss is not a crime. So let's try. This video is very long. It's almost 40 minutes. God, help.